Thank you for joining us at xm.com. In this preview video, we'll be looking at the Bank of England's policy meeting and, of course, the outlook for the pound. I'm Cristina Marujos. With me today is Cristina Partenido, investment analyst. Cristina, we are at a time when markets are increasingly confident that central banks will cut rates next year. But earlier this morning, UK wage growth surprised to the downside, slowing more than analysts expected. So could the data affect the Bank of England's rate outlook on Thursday?
Hi, Christina. That's right. Central banks have already convinced traders that there's no need for additional tightening as inflation is moving towards the central bank's 2% target. And generally, the UK economy is slowing down as the Bank of England desires for a lower inflation. The economy needs to react negatively to the aggressive tightening delivered over the past year, and this seems to be happening now. So the weakness in wage growth could be rather good news to the central bank, because policymakers have been somewhat worried that rising wages could trigger a second round of inflation, but instead wages will probably have to weaken further to eliminate inflation worries, because they are currently growing at a much faster pace than inflation at 7.3% year on year compared to the headline CPI inflation of 4.6%. That suggests that consumers have still strong purchasing power. So in my opinion, the Bank of England will probably retain a neutral stance, keeping its higher for longer interest rates guidance. And perhaps it will also say that it's too early for to think about rate cuts. There will be no update on economic projections, and there will be no press conference following the meeting, so investors might not have enough details to adjust their rate projections for at least 3 rate cuts next year.
And now turning to the FX markets, the British pound trimmed some earlier gains in the wake of weaker than expected wage growth, but the decline was limited and Monday's upturn is still intact. So could the Bank of England policy meeting strengthen the recovery attempts?
Futures markets are certain that no changes in interest rates will take place this week. It's also the last meeting of the year, and there are no serious negative developments in the economy, as we said before. The Eurozone, for example, seems to be more fragile than the UK. So the central bank has no reason to call for lower interest rates and therefore deviate from the Fed. It will probably wisely stick to its wait-and-see approach before it updates its policy guidance. So although no changes in interest rates will take place, I think that the voting structure could still attract attention in this case. If it surprisingly leans to the hawkish side, showing more policymakers prioritizing inflation and therefore backing another rate increase, that could be pound positive. Otherwise, if some hawkish policymakers abandon their rate hike projections, that could be pound negative. Though investors are already expecting rate cuts and they would like more evidence that a rate cut could happen as soon as in May. So in this case, the pound may not lose much ground against the US dollar if some hawkish policymakers, let's say, prioritize growth over inflation. Let's see what will happen, because we also have the Fed policy meeting and the ECB policy meeting taking place this week as well. So pound could become more volatile because of these central bank meetings. If, for example, the Fed appears more hawkish on Wednesday, that could still squeeze the pound lower and therefore ruin the pound's recovery attempts.
It is indeed a busy week for markets, this one. Cristina, thanks so much. This was a preview video on the Bank of England policy meeting coming up on Thursday here at xm.com.